The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Market days, 11 o'clock till noon, Eastern, and 617, oops, not 617, it's 877-927-6648. Wrong zip. Area code. So please give me a call. I'd love to hear from you. This is a good time to call because we're cusping here. What do I mean by that? I mean that we're in leg C in the E-minis, leg D in the 120-minute chart, so there could be a pullback. I have the Chapman wave trend gauge out. It says this morning at some point we should dip negative in the Dow, and you can see we've kind of stalled. Day's young, anything can happen, but that's kind of the way it works. Most importantly, let me go through all the different things as we go through the numbers. The Dow is up 24 at 16,719. So when I look at this, INDU, what I'm looking at, and this is going to be fascinating because the technicals have actually strengthened. But there's a leg D at this particular point in the 120-minute chart, just like there was in the E-mini, S&P E-mini, 120. It's gone slightly above the resistance line to turn that into support. That's around about 16,690. Let me just see where that would come in. Right there. So that would come in at about 16,678 is the area. So it's what's in here. It's only about 30, 40 points below. Most importantly about this is that you've got you've got the trend line rising in the 120-minute chart, and you've got rising wedge formations that culminated in a fairly sharp pullback. I'm not expecting a fairly sharp pullback just yet. I think it's a little later on. I think it's later this week. Having made a new high today in the S&P. Yesterday we missed it by 16 cents. Today the S&P, not the SPYs, the S&P made its all-time high. Dow had already made its all-time high. New York Stock Exchange an all-time high. We've got everything in sync here as far as the major arteries are concerned. The lesser ones, like the Qs and the Qs and the IWM. Let's go to those right now. Look, the IWM stalled at 112.22, peak C in the 120-minute chart, single leg A up in the daily. But look at this. When I pull up the weekly chart, horrible. It's telling us there's a divergence. This divergence is part of a rotational rolling correction. And at some point, we're going to get the big caps to start moving down. Maybe these will start to hold or rally as that happens. Or everything comes down, that's going to be more serious. So the IWM, a lot of room to go to the upside. The Qs, leg C in the 120-minute chart. Leg C in the daily, just getting close to the breakout. No, it isn't the breakout of the symmetric triangle. Let me just get this. Right there, that symmetric triangle with a lot of resistance at the 87, around about 87.50. Right now it's at 88.44. Now it's a rising trend line. Stop just about at it. It could go a tad higher. In the question of the day, and I'll do this because it's appropriate right now, in the IBB, that's the NASDAQ iShares Biotech ETF, I'm anticipating just another arch formation. Could this be the start of a major move, a major counter-trend move, not to the all-time highs, but a pretty decent 50 to 60% rally in the IBB sector? I don't think so. I think it's a rally, but I wouldn't be surprised if the selling comes back in very soon. That's just the way I'm looking at it right now. A lot will happen by Thursday. If by Thursday the IBB is above 236.50, I'd say, okay, now we can go further because we went down to 20. Wow, can't believe. Went to 207.48. 207.48, that's that's a 20%, 20%. That would be very good. 20% would be 40 points, 247. We're almost there. Oh, good bounce in the IBB, but I still think it's a bounce. That's the way I'm looking at it right now. Quickly, we're going to go, before we go to callers, we're going to say gold is up 70 cents at 12.96. I just don't see anything yet in gold. Silver's up 0.02 at 19.57. Platinum's up 21. Let me just see. Platinum PL. Platinum's looking good. Could be making a leg C today if it goes above, in the continuous contract, above 14.47.10. And so far, the high is 14.54. Oh, it's gone higher. Wait a minute. 14.59.60. I thought there was something wrong. 14.59.60. It's 11 cents from making leg C in the daily. That's very good action. High grade copper, HG, right there. HG is stopped right at the 200. Oh, these moving averages are so important. Look how it stopped dead. Bam! It goes and it bumps its head against 3.15, which is exactly the 200 period exponential moving average resistance. Today's high, 3.1540. So copper's doing very nicely, but it's got to break through that resistance and got to do it soon. Let's just quickly go to the TLT, which I think made a peak, a G pullback, and the USM June contract bonds made a peak F, pulling back. I still think high-level consolidation. I think rates are just stuck in this trading range, slightly lower from here, but basically in this range. Going to be watching it real closely. And the final thing we're going to look at is the currency pairs, DXY, dollar. The dollar is actually, important. Dollar rallied and broke out above the previous high of the arch, which was at 79.99. Today's high is 80.14. Very nice action. That would tell me the euro is pulling back and that gold should be pulling back as well. Yep, look at the euro crunch. And it's going to be going down to the low of 1.367. It's at 1.370. Euro is still very weak. And the monthly chart is saying, hey, be careful. This is an F if it doesn't recycle. And the weekly says it is an F, and it's right on very important support. Well, let's go to Garo in Newport Beach. Garo, how are you?
Very good. Thank you, sir. How about you?
I'm well, thank you.
All right. Calling regarding Twitter. I'm not a Twitter buyer usually. I don't buy nothing less than $90, $100 a share.
Right.
But this is a chart that it reminds me of Facebook when it came at the beginning when it was IPO started at $40 and then it went to $18.
Plunged.
Yeah, and then from 18 it started to gradually to grow up, went to 70. This is something like that Twitter. So it started at 30-some dollars, and it went up to 74. Now it's going below its IPO time. So
right.
It's gonna go somewhere, and it's gonna go flat for about a month or two, and then it start to pick up from there. Where do you think out of blue that how far this can go lower?
Well, this is very interesting, folks. We're looking at 74.73. So we're looking at Twitter TWTR trading at 33.53, down 41 cents. The way I'm looking at Twitter is I agree with you that the low that it just made, being cut in half, more than half,
yes,
coming down to the 29.51 area,
yes,
tells me that this bounce is going to be absolutely critical, because if I'm correct, and if my indicators are correct, and that we should get some higher highs this week, and then we're going to become somewhat vulnerable to a sell-off but not the big sell-off. That has to come after leg D in the weekly chart, so that's later in May, where we make some kind of a top-off, fairly, I'd say, important significance. Twitter could have a counter-trend rally, and the way it looks is in the next 2 days, it's very important how it closes today. If it closes below 33, I'd say all it's doing is making that little arch formation, the little H that goes to an M. If it's able to break above 34.79 this week by Friday, and that shouldn't be a big deal for a stock like this, $1.40.
Right.
If it's able to do that, it says now it can test the big gap down that it had on the 6th of May.
Right.
The high was 36.10. The previous day's low was 38.05. That's 2 points. That's a big deal. And I'm thinking that this is going to make the H pattern, and then it's going to go to lower lows.
Yes,
but sometime in the summer, I think Twitter's going to give a really nice counter-trend rally on a percentage basis. Can it get back to the 74, 73 level? I wouldn't even be thinking about that. I'd just be thinking about, is it able to hold above 40.80 and trade into the 43.63 area, which is the 200-period exponential moving average in the weekly chart. So I'm with you. I would treat this merely as a bounce. If it takes out, if there is a lower high bar today, if it doesn't take out yesterday's high, what was yesterday's high? Yesterday's high was 34.10.
Yes,
if it can't take that out today, but tomorrow it goes 1 penny above it, I would actually have it for your kind of a trade. I say, great. If the market is generally up tomorrow and Twitter is rallying nicely, it could very quickly go from 33.51 to the 34.78 9-period exponential moving average. That's the way I'd be looking at it. More importantly, I wouldn't be even thinking about this stock as a buy and hold intermediate-term buy until it does quite a lot more. I can't even say testing of the 29s. I don't know if the 29s are going to be major support. I'm just thinking testing of some kind of a base. If it establishes 29.51 in the next 2 weeks without breaking 29.51, I'd call that a base that you could at least rely a little bit on. But I'm with you. I'd be very cautious, but I wouldn't be afraid to do it as a quick trade, but nothing more than that.
Absolutely, yes. I'm waiting to go higher, so I will short it with more free mind than going long with this chart.
So if you're going to short, the area to short is if in the next 3 to 5 sessions it still hasn't taken out the gap high of 36.10 and starts to make an arch over to the right side.
Yes.
So I'm with you. Hey, good eye, but
Thank you.
Have a little patience. Good. Thank you for calling, Garo. I appreciate it. Garo, Newport Beach, California. Basil Chapman in Newton, Mass. Newton, Mass on the other side of the coast. I'll be right back. Dow's only up 10. S&P's 0.83. Let's see if it goes negative like my indicator says.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back at an email question about TMUS, TMUS, which is T-Mobile. I mentioned this before. I had the same person email earlier on, and I said, yeah, it's looking good. He was a little afraid to hold it into earnings. I don't blame him. But earnings came out pretty good, and it just popped up. It's trading at 32.70 TMUS. This is T-Mobile US Inc. Now, it's a fascinating thing because we happen to, in my opening call, let me just double check. We happen to own a telecommunications company, and it's done very nicely for us. Long position. And I'm in absolute, it's a total mystery to me. There is going to be so much competition in this particular area. I'm not sure how they're going to make money at some point. It's just that many of us are lazy. I say us because I haven't even updated I keep getting calls about my cell phone, which is an old Droid. That I can update it or get a new one. I'm probably overpaying because I should have been getting a new one 8 months ago or more. I don't feel like being bothered. It just does the job for me. Probably would switch to an iPhone at some point. And just lazy. And lazy for change, that is. Once it's made, I'm not lazy at all, then I'll use it. But it's just oh man, there's so many new. I'm having enough trouble as it is with these different electronics that I have, trying to keep everything organized. So looking at T-Mobile, the chart is very good. There are so many products coming out that are going to allow you to make. I mean, even Skype. Heck, come on, so many products that are going to make it very easy to do anything in the way of communications. It's just us old fogies that are kind of stuck in the past. So I'm looking at these askance, and yet at the same time, many of them, look, even telephone, T, doing very nice. Look at that nice rebound going from the 39 round number high down to under 32. What did I look at yesterday that had a round number high? Oh, look at this. NOC, round number high, 126. Northrop Grumman, defense industry, round number all-time high. Isn't that interesting? So anyway, back to our story. TMUS, I think it was, right? TMUS, yes. So what do I think about it? I think that you're on the right track. I think it's a very nice stock. Is it an intermediate term buy? Is it something that's going to go from here to leg B, then C, then D as an IPO in the monthly chart? I just can't say yet, but I will be able to say if we can get to 35.50 in May and hold through the close of May, I say, gee, this looks good, and this could just creep up through the summer. In the meantime, you're in the stock. And good reports. Stochastic is 91% in the daily. MACD is good. I like what I'm seeing. The monthly chart is going to offer a lot of resistance somewhere in the 33.50 area, and it's about a point higher. So in the meantime, back at the ranch, I would just keep it on you've got a small position. Would I add to it? I would rather add on a pullback. Let me just do this real quickly here. That's an A minus right there, because it restarts, and then it goes A, B, C, C, D. Okay, C, D, and okay, this is fine with me. Yep, I feel very comfortable in saying this. I would rather look to possibly add, if there's a pullback, it's 32.69. A pullback no further than 32.20, and then it stabilizes regardless of what the market does, and then it starts to move up a little bit from there. I say, hey, now's an opportunity because it's gapped up, it's held beautifully, and it looks like it wants to retest the previous high on the 3rd of April at 33.69. So that's exactly 1 point away. So let's do this. Let's just say that there's another pattern here, which it's a viable pattern, but it's already been broken. So I'm just going to say it's made one very successful breakout pattern. Now it needs to do another one, and that is going from that pattern there, from the channel down to the cup formation back to test the previous high. Good, you're in it. I wouldn't get too carried away. I'd wait for a little bit of a pullback, but it can be no more than 1 day, and then it's going to move smartly and preferably to maybe leg C or something like that, but it definitely needs to get to the 33.17 area or higher. So I hope that helps you. Email on TMUS. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. So we're looking at, the question was, the 300-minute NASDAQ future June contract, E-mini. I've got it as leg C right now with a kind of a long wick candle. It says that it could be in a bit of a trading range. Should still go to D. MACD is very strong. Just flattening a little bit, but it's still very strong. Stochastics at 96% and flattening. If it flattens, it maintains the upward trajectory. So it's still very good. I hope that helped you. There was a question in the Dan. The other question was, could the Dow be in leg F? Dow in leg F. There's any chance that, Dow Diamond Weekly. Good question. In other words, an alternate count. I've given up on that. Yes, absolutely, it could be. No, I'm sorry, I should not say that it could be. It cannot be at all. In the Chapman wave methodology, except in a very rare instance, and there are just certain criteria that are important. If let me just, how can I phrase this if you're listening? Let's make it visual. The Dow Diamonds went to 164.89, which was a peak F on the 7th of March. It then cascaded very quickly, but then held very well at 160.36, where 160.38 on the 14th of March. 3:14. Then it ran up in a very quick peak A, peak B, peak C, and it went to D at 166.06. That Oh, that's the daily. Okay. The question. But let me just finish this thought here. The reason why I was thinking that you might also be connecting this with the daily, the question with the daily. Right. Okay. Is that at 159.88 when it plunged after that peak D-top on the 4th of April, it went down to 159.88, and that was lower than the 160.38 low that was made on the 14th. So that says that if you go to new highs afterwards, you've started a completely new and very different buy signal to buy mode. 159.88, 159.88, I forgot to look at the date. That was on the 11th. So that was the question there. That means you can't overlap the wave count, that D of the 4th, going to the 166.07 high, and then today's high, or yesterday's high and today's high, making an F. So that's what I was thinking of. So I just wanted to clear that up in the Chapman wave. Now the question pertains to the weekly chart. The weekly chart is different. This could be, in fact, G/C. I just don't think it is at all. Stochastic at 89%. MACD just turned positive yesterday, but the week is barely begun, so I can't talk about it as a weekly chart. The pattern is just not one that says to me, this is a G, a peak G, and we're going to plunge. This week is going to be the plunge, and we're not going higher. No. I think that this is, I've got it as a C, got an up arrow at 153, whatever that was, 12, the low of, I keep clicking on that, the low of the week of the 7th of February. So, good question, but I don't see any, no. So let's just get that out the way. Now, one of the things that I spoke about is, in the Chapman Wave, my opening call, what I said to subscribers this morning, is that I believe we are looking at a situation where my Chapman Wave trend gauge, which says that there should be some negative action in the Dow, regardless of where the futures are early in the morning, but by sometime in the morning, usually it's mid-morning or earlier, something in the Dow, a couple of stocks I'm looking at in the Dow are holding the Dow up very nicely. You've got Merck, I think it was, Merck up 1.1% at 55.95, up 66 cents. You got a couple of others. So I'm looking at this and I'm saying we should still have some kind of negative action, but there's been weak action so far that there's been very little follow through. So I'm going to go to our next caller. We've got Brent. Let me just double check here. We've got Brent in Martinez, California. Brent, how are you?
I'm doing just great, Basil. How about you?
I'm doing well, thank you.
I actually had some calls on Rackspace that I bought on Friday.
Ooh.
I sold at the open this morning, so that was a good trade.
Outstanding. That is so. This isn't your question, but I'm going to ask the question. I follow Rackspace, RAX, periodically. I would like to say I'll follow it all the time, but in fact, I don't. One of the reasons is, let me just get to it right now because I just want to show you something very interesting. I did look at it. Was it last night? Oh, I've lost all that information. All right. Well, one of the reasons is that when it goes into a down mode, which it does periodically, it just stays there, and it stays there. And it went all the way down to 20. It went down to 26. The last peak in the monthly was the arch formation back at about 54 in September of 2013. And before that, it went to 81.36 back in the 31st, back in January of 2013. But the downtrend is powerful. When it was on its way up, oh, I wish I had my notated chart here. From its IPO, remember it so well in 2009, it went peak A, and let me just double check here. It went peak A, B, C, and then it went to a D with a beautiful doji top in January of 2013. Now it's making the pattern that I call the A pattern, straight up and straight down. So my question to you is I did hear something happened to the telephone. Brent, are you still there? I'm not sure Brent is there. All right, Brent, call back if you can. I'm not sure why you're off.
Are you there? Are you there,
Oh, you are
Basil?
there? Hi, Brent.
I'm sorry about that. That was my fault.
Okay, I wanted to know what gave you the indication that you could go ahead in such a terrible-looking stock to buy it for an option calls when it made its low down the 26 area just 2-3 days ago.
I generally look for stocks if I'm trying to do earnings plays, something that's either at its highs or something at its lows. And I don't make big bets. I just make something I'm comfortable with taking a chance with, a very small percentage of my portfolio. And what I'll generally do if it's kind of against my discipline. My general discipline is to only buy after the numbers have come out. But if there's certain criteria that's been met, like I said in this case, something that's pretty much at its lows or something at its highs, then
So at the highs you'd be thinking of shorting?
Yes.
Okay, yeah. Okay, well, you see, I love when you have a particular modus operandi, you know exactly what your own characteristic and trading plans usually are, what you're comfortable with, and then you step out. I love when we've been trying that with Garo, and I think it really improved his trading to be able to step out the box just a little bit to garner a little bit more profit. And in your case, you've stepped out of the box with a very well calculated bet, and it has to be called a bet because we really don't know how the market's going to respond in most cases to an earnings report. So I admire you for doing that, and I admire you for making it just a small portion of your portfolio, because Rackspace, folks, RAX is trading at 29.91, up 8.65%, up 2.38. But you know what? Today, this morning, it had the great pleasure of visiting 31.64, which it hasn't even been close since sometime in April. Now it's pulling back. I wouldn't be surprised if this is just a gap and it does a lot of backing and filling before it actually garners any strength. A great call. So you wanted to look at...
Now I'm thinking about going the other way on Deere, actually. Their earnings come out tomorrow before the market opens, and I'm considering doing some puts on that one. So I just would like to get your opinion if you could.
I've spent a little bit of time on Deere shaking my head and saying, oh dear, because I have to tell you something. It's had, how can I put it, compared to Caterpillar, and they're in different areas, although you would think it's the same field, they've been in different areas, and they've done very well when they're in a trend on the upside and very well on the downside. Deere now is closer to its all-time high, but I've got it at a peak E, having completed exactly, this is a pattern that I talk about a lot, especially in my Master Trader series. In fact, I'm going to put it down here and send it to my Master Trader folks so that they can really look at this particular chart. So I must make a note so I don't forget. So DE, this is the rectangle formation, rectangle, which goes from a low bar, and it gives you, within a shorter time frame, as well as in the original time frame, a beautiful buy signal that goes to a leg D, and it's done that and certainly done that in the daily. But the weekly one is I looked at this a lot because it's a really unusual pattern. There are two unusual patterns, and I think I forgot to write the other one down, or I did last night, and I can't find which piece of paper I wrote it on. It was a pattern that I know my patterns, and I just didn't recognize it as a pattern that's familiar. This one here in the weekly is like not a it's like not a cup formation, it's a double top, but a rectangle. And what that rectangle says is you might get a short-term pullback, but just be a little bit careful, especially since the monthly one has done the same thing and could have an overlapping wave. If Deere pushes over 95.60, it could have a really quick run up to the 99.80 area, which is the all-time high. So, and that's an overlapping wave, which invariably needs another month in this particular instance to make a peak. So if Deere pulls back now, that's perfect for you, because if it doesn't go above 95.60, it's at 93.21 in the next 2 days, then there's a really good chance that you're going to have the pleasure of watching it go in the rectangle down towards the lower part. And that says it'll test the 92 level and probably break it, because 90.75, between 91.18 and 90.62 is key support. Well, for an option to drop 4% in your core, which is the root position of the stock, from the 93.16 or whatever it is tomorrow, below 91, that's 2 points, 2.5 points. For an option, that's really nice. So here's my recommendation. I'm going to suggest, I don't know when you would do it. It's going to be tomorrow morning. Does it come out after the bell or before?
They come out before the market opens, and those I generally just wait for that morning, because there's not quite the amount of time for the market to react like it is after the market closes. So.
Okay, so you would wait until the morning, and if it gapped up, you would short.
Yes, depending on, it's nice to be able to see the numbers. I know, most of what I do is more on a technical basis, but I do like to look at the numbers, and it gives me some sense of what potentially could happen with it. And so,
okay, great. So here's what I'm going to recommend, because we've made a new high today, so tomorrow might be the day that we make a peak in the daily charts. And that would say that if the market pulls back, that even if Deere gaps up, it'll still come back from its high. So that could give you some cushion. That's my recommendation. I would say to you that the risk-reward is favorable to buying the put position, but it'll be too late if it gaps down, obviously. If it gaps up, I would say it's... we don't know where it's going to close today. Let's just say it closes somewhere around 90. It's at 93.21. Deere, DE, trading at 93.21 minus 44. Closes the day just up a little bit, 93.50. News comes out tomorrow morning, and all of a sudden it's up 2.5 points. As long as it doesn't break above 94.50 to 94.89, if it goes above that, what I would say I would say let it just pull back a little bit from the high. No, actually even better. Now, I'm not going to tell you how to do it. I think you're going to know exactly what to do. I'm going to suggest that if it does gap up tomorrow, that from my eye, if it's not able to hold any gains into Wednesday, Thursday, especially Friday, this thing could make a round trip all the way from the gap up high to test the low of today and go lower. That's the way it's looking right now. So I think you've got something here.
All right, I appreciate it, Basil. I've done a lot of these, and some of the best ones are when it makes a counter move. Thank you very much, Basil.
Thank you very much.
I appreciate it.
We're going to be watching, and good luck. We'll be back with Rob in Paramus, New Jersey, straight after this. Basil Chapman, Tiger Technicians Hour. Dow's struggling. It's only up 15. S&P's up 0.42. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're just checking here because it's very important to see which stocks are participating. At least 5 out of our 6 stocks, I think. The 4 out of the 5 longs are up, and that's good. One got stopped out for a very tiny loss. We're going to go back. We're going to go to, let's see, where were we? We're going to go to, in Paramus, we're going to go to Rob. Yeah, hi, Rob. How are you?
Hey, Basil. I'm good. How are you doing?
Very well, thank you.
I had a question. If you believe that the dollar is going to go up, would that mean the S&P 500s could go down, or does that relationship not hold anymore?
That relationship works periodically, absolutely. It hasn't always worked, and it happens sometimes for a brief period, or it could actually be an extended period. Depends where we are in the cycle. So let me just do one thing here. Let me just say that the S&P weekly chart has gone, oh, I've got to keep checking these things, 1883.57, 1883.97, yeah, has gone to leg D in the weekly. And the daily is still in leg C. It happens to be corresponding to the dollar showing some strength and the euro showing quite a bit of weakness. It tells me, especially in the weekly chart, that the candle that the Chapman Wave Roman candle formed last week, which is very negative, it happens at the top, but turns out to be kind of positive when it happens at the bottom, could in fact be a positive sign. And it says to me that I might be correct in saying that within a few days we should get some kind of a top, we should get a pullback, not a big one. I'm talking about just single-digit percentage pullback at this particular time as the rotation continues. And maybe an Amazon or a Google. I just had a question about a Google. I didn't get a round number at the 311 area, but Google looks like it's making the same H pattern that many of these are making. And unless they can break decisively above the left side peak of the arch, it's just going to stall out. So let me put this into context. If there is a rotation into, say, the biotechs and the momentum stocks that failed miserably, and are now having a little bit of a bounce, we might see that the dollar actually rallies and the big cap stocks, maybe like a Merck, which is doing very well, but is getting a little bit overbought. Oh, it already has gone to a peak E in the daily and has come back down. And an E in the weekly, yeah, maybe a Merck corrects a little bit more. Maybe the dollar does have an impact in this particular move, and I think I'm calling it maybe a 7 to a 9 or 11-day consolidation. It could turn out to be more, but it'll give me what I'm looking for, that peak in the weekly chart where some of the indices are in leg C, so that finally we can get to D sometime in May. And what's very important about that is that perhaps the dollar is saying, hey, I've had it down here for so long, I'm getting ready for a much better rally than you've seen in a long time. I don't know, but I think, thank you for pointing it out, because it's something that's been in the back of my mind. I did a little bit of work on it, and that's why I'm able to at least say to you that I've thought about it enough to think that the dollar, in fact, could have its first pretty nice percentage rally, and that could correspond to the general market having some weakness. Is that answering your question a little bit?
Yeah, a lot. Would you short the euro dollar at this point, or?
Well, the euro dollar has been smacked. It's had a tremendous decline. It's 2 days in a doji, and then today is ugly. I would be looking at I do two things with the euro dollar. I try to have a little patience to wait until Thursday. Maybe it's going to be Friday when I do get a signal in the Dow. And if that's the case, then the dollar should start to rally. So any rally in the euro, I would start a short position, which I'd probably add to as it makes the arch formation and it comes back down. The weekly chart is on very important support. It better hold or it's in trouble. So good. I'll follow that up a little bit more tomorrow, but good eye. I think you're correct in your thinking. Thanks for calling, Rob.
You're great.
So, folks, I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN,